Welcome to Albuquerque Real Estate Talk, episode 512, mid-November 2024. It is Tego and Tracy Venturi with the Venturi Group of Real Broker here in Albuquerque. Another episode, 512, talking about what's going on. We got a lot of news this week in real estate and some stories and some good information. We're always happy to be here sharing what's going on. Tracy, if somebody wants to get a hold of us.
Well, we are Venturi Realty Group. We're a group of realtors working together. We have people that specialize in working with home buyers, those that work with home sellers. We have realtors that do both. And the best way to reach us is give us a call, 448-8888 in the 505, 448-8888, or you can get on our website, welcomehomeabq.com. Do all the searching you want there. We don't make you put your information in to look at a house there. So check out welcomehomeabq.com.
And guess what? Got the most market data of any website in Albuquerque.
I bet it
Just
does.
because some nerd does all that stuff and loves to keep everybody up. I was at an event, Tracy, and it was in a real estate investor event. These weren't other realtors; they were investors. And one of the guys walked up to me and says, "Man, I love your site. Oh, you've got all the data, so I can see what's going on." I'm like, "Thank you."
Yeah.
So that was cool. Speaking of all the data, I was at a different event, a realtor event yesterday morning, and the group was asking me about what's going on in the market. What do you see going on? And I started to talk about it. And I said, there was about 15,000 homes that sold a few years ago, and now we're down to less than 10,000. I'm like, oh,
For
wait,
the year.
for the year. And I thought, oh, wait, hold on. I need to make a chart for that. And so I did. It's on my Facebook. It got a lot of traction. A lot of realtors reshared it because it was good information. And what I did is I looked at how many homes have sold in the Albuquerque market in 1 year. And I went from November to October, since we just had October. It was the most recent data I had. And in the last 12 months, Tracy, there's been 9,500, let me go back. Hold on here. 9,547 single family homes that sold. That's both attached and detached in the whole metro area, though. But for perspective, if you go back to 2021, October, it was 15,000.
Wow.
So it's a good,
Third.
what is that, about a 40, it's 30 some percent drop, a pretty substantial drop, since 36% drop. There we go. So yeah, I mean, it's much slower. And then I got into this conversation and I was thinking about those years of 20 and 21 and part of 22 was, okay, did we pull a bunch of home sales forward to those years, and now people are just kind of staying put? And I think the answer is yes, they are, especially if they got those low rates back then, right?
Right. Makes sense. Good
My
information.
my takeaway was there's demand building out there. It feels like there's demand, right, for both sellers and buyers, but there's just things that are kind of keeping them out of the market, via interest rates for buyers, prices for buyers, just affordability in general.
Or it could be just time of year for buyers too. Seasonally moving if they have kids in school and things.
And that is true. And there's been a lot of conversation in the real estate econ world about, okay, what did the presidential election and that time do for everything? And there just anecdotally, it does seem like it was slower and there just wasn't a lot of activity for a few weeks there. And now it seems to have shifted a little bit.
We've seen that, haven't we? It's like there were several people that we talked to said, we're just waiting right now until after the election. So the election's over and we're starting to see people sort of normalizing a little bit, I would
Yeah.
say.
Yeah.
Yeah.
So anyway, it's just interesting. I think we're probably at a low point in the number of sales transactions in our market. And I feel like going into next year, we'll see it increase a little bit. I don't think it's going to be 20% more, or maybe 10% more, maybe 5% more, because people need to move. They need to make changes. And sometimes, even if the numbers aren't ideal, they still have to make that change.
Sounds good.
Yeah.
Always good information, Tego. So let's talk about kind of this week with our team. One of the topics that we kind of covered was people asking us, should I keep my house when I'm moving and keep my current house as a rental? Should I rent it or should I sell it? And it seems like there's a lot of pros and cons for both of those things. So we put together a list of pros and cons of should I keep my house and pros and cons of should I rent my house.
Great.
So should we go for it?
Yeah, let's
So
let's see what you got,
let's talk about some of the pros of selling your
and
house.
I'll tell you where you're wrong.
That's perfect. Just what we do. So obviously pros, you get your immediate cash, right? You
Of course,
get
yeah.
whatever your equity is after your expenses. You can choose that to maybe buy another house, put down on another house, pay off debt, or invest it in something else, right? Selling your house, another pro, no landlord responsibilities. You do that for us. Tell us about that one.
Well, yeah, being a landlord it takes some work, and it depends on the property too. And it depends on the type of property. I know people that own multifamily properties. I know that's not what we're talking about. We're talking about single family homes. But yeah, there's a lot more turnover. There's a lot more work. But if it's a tenant that's a long term tenant, then it can not be a lot of work. Obviously, the condition of the property has a lot to do with it too, because that's where you're going to get those maintenance issues.
Well, no landlord responsibilities is also the property management hassle. Like you finally get that vacation for the year and they call and say, the air conditioner's not working, or the heat's not working, or the water heater's not working. So you need to have really reliable people ready to step in for you if you're not able to do the work yourself or for when those things come up, because they do come up,
Yeah, I mean,
right?
the other just let me just go through this since we're talking about it is what are the responsibilities if you got one home or a couple homes and you're going to rent it? What do you need to know how to do? One, you need to know how to find tenants. Part of that is screening. And there's a lot of different there's some great apps out there now that makes it super simple for the most part to screen applicants. So that's step one. And of course, you need to know the laws when you're screening a tenant because you can get in trouble depending on you
Fair
do and
housing laws
what criteria you use to pick and choose tenants. And then you also have to have some system for collecting rent.
and
Uh,
keeping track of down payments or deposits and things.
exactly. Yeah. So you have to have a little bit of a bookkeeping system in place. And then, and like you said, the big one is really the ongoing maintenance. If there's certain maintenance or certain things that you're going to be responsible for versus the tenant be responsible for.
And in New Mexico, to go into a house that you've rented out to someone, the New Mexico rule is that you have to give the tenant 24 hours notice that you're going to show up at the house to do a repair or scheduled maintenance type things, right? If you need to do just roof maintenance,
Well, yeah,
not a fix, because they've already called you to say I need it
yeah,
fixed.
exactly. That's okay, but if you need to go into the property, you do have to give proper notice, and there's
Right,
again,
right.
it's a tenant where is it? The Tenant Landlord Relations
Act.
Act.
So selling your house, avoid market risks. One other pro is you're avoiding market risks. We might feel the market's strong right now, and you might feel it's not going to be strong in the future or that prices might not continue to go up. So you might want to just sell the house and move whatever equity you have into something else,
Yep.
right? Simplifies your finances. So the things you just talked about, the bookkeeping, the keeping track of deposits and rents and the tax implications on that can be,
Was this was pros for
pros.
selling? Okay.
Yeah, the pro is it's simplifying it. You don't
Yeah.
have to do all those
Yeah.
things for ongoing, right? Some of the cons,
Yeah.
no future appreciation.
Yep.
So if you feel like the market's not gonna keep going up in the short term, then maybe that's not a problem for you, but historically, over time, houses appreciate in value. So once you sell it, you're not participating in that future higher potential value.
Historically, in Albuquerque, home prices on average across the long term have been about 4% per year.
Perfect. Another con of selling your house, capital gains tax. So the rule, Tego, is 2 years out of 5 as a primary residence gives you a
You get a depending how much your gain is on your property over that time. If you're primary owner, you may or may not have a tax consequence. Talk to your CPA about it. I want to be careful
so
what I say and
so
don't say
there
there, but yeah,
there may be no capital gains tax or there may be capital gains
correct.
tax. So the con could be that you haven't had it as your primary residence for 2 years, in which case you would be paying capital gains on the increase in value from
Correct.
when you bought it to basic.
Correct.
That's very basic on it.
Yeah.
There's more
Yeah.
it's more
It is.
complex.
It is more complex, but
Another
yeah.
another con, your limited rental income. Once you've sold, there's no potential for steady income that renting could provide.
Right.
Another one, transaction costs. So, of course, selling a property costs money, whether it's real estate commissions, fees, sometimes repairs, renovations, and things like that can cost money, right? But let's talk about rent.
The pros
The
of renting your
pros
home.
of rent.
Okay.
Okay.
Being a landlord.
Monthly income.
Yeah.
I know
Mailbox money, as I call it. But yeah.
I was waiting for you to
Okay. I
say
know.
mailbox money. It's just that check just shows up in your mailbox. Of course, it's not really in our mailbox anymore. It's through Venmo and Zelle, and
Mm,
sometimes it
yeah.
comes in the mail, I suppose.
PayPal.
Yeah.
Sometimes. Yeah.
But rent can provide a steady stream of income, potentially even generating positive cash flow after expenses. So if you've owned the house for a bit, you have some equity, chances are the monthly rent is going to be more than what you might be paying if you have a mortgage and taxes and insurance on the house,
Yep.
right? Long term asset growth, you're keeping that property, assuming the value continues to grow up, you're getting rents plus you're getting the asset value in the future of being potentially higher.
Let me jump in here and just talk about this. This is kind of real estate investing 101 is that how you get revenue or how you gain. It's not just revenue, but actually how you grow your net worth with rental properties. Number one, of course, is cash flow, right? That's the money you get after you've paid all your expenses,
Every
right?
month.
Every month, right? So there's cash flow. Then there is that gain, that equity gain or that appreciation. So let's say again, we calculate it 4% per year. You're getting that appreciation because you haven't sold the property. You still own it. You still get to cash out that gain in equity whenever you sell. The third thing is if you have a mortgage in place, for example, now your tenant is now helping you pay down the principal on that. So you're gaining again more equity there because your principal's declining. And then the last thing is the taxes. So there's potential tax savings because you can depreciate the value of that property once it gets transferred into a rental property. So those are the kind of the general four things that you can think about if you're thinking to rent. It's not just cash flow is really what I want to get out
Totally.
there. Yeah.
That was great. Another pro for renting is tax deductions, right? You can benefit from tax deductions on mortgage interest, property taxes, maintenance cost appreciation, which could lower your taxable income
Yeah.
against what the house is, right?
Right.
Flexibility, you still own the home, which means you can potentially move back in later or decide to sell it when the market is different.
Yep.
Yeah.
Absolutely.
Some of the cons of rent, we talked about it sort
Yeah.
of.
Yeah.
Landlord responsibilities.
For sure.
You can hire a property management company and pay them to manage the property for you. So that cuts into your profit, of course. But if you're doing it yourself, you have to manage the tenants, the repairs, the maintenance issues, which can be costly,
Yeah.
right?
Yeah.
What we know, Tico, is in general, and this is kind of overly general, is tenants don't necessarily take as good a care of the house as you do. And they might not even tell you, hey, the ceiling leaked when we had a big snowstorm last week, right? They might just live with it and forget to tell you so you don't even know to fix it,
Yeah.
right?
Yeah.
Vacancy risks.
Yeah.
So when we look at monthly rent and look at maybe raising the rent $50 a month versus raising the rent $50 a month and having the tenant decide they're going to go look for a different place, you risk a month or two of no income, right? Because the tenant might move out and you have to clean the place and get it ready for renting again.
Yeah. When I'm evaluating a rental property, I always just in the pro forma, just giving an idea, I always say basically 1 month per year. That's very conservative
1
because
month per year, you assume you're not going to get
I'm
rent
not going to get rent. Right. Right.
to make sure that the rest of it makes sense.
Exactly.
Yeah.
Exactly.
Okay. Another con of renting your house, tenant problems. We've had those a few times. You've
Few times, not too bad. It's been
gotten
pretty good lately.
lately it's been very good, but problematic tenants can cause damage, miss rent payments, and create legal issues, which can cost you money and time to resolve. Yeah.
Yeah.
I'm not going to go into some of our
Well, and
stories.
we've seen it. Well, we'll just say our stories aren't that bad, but we've seen it over the years where somebody moves out and they're like, you know what, I'm just going to rent it, and it's a friend or a family or somebody like that, a friend of a family or whatever, right? They don't do a proper screening. They don't. They don't do a deposit, and they
They
just
give
kinda
them a
like
reduced
give them a
rate.
special deal. They get the house back 2 years later, and it's a mess. And so you really that screening, that upfront screening when you rent your property is really, really critical, and you have to do it well, and you have to do your due diligence because it'll could cost you $20,000 down the road.
Yeah, Tego. So going back to the 24-hour notice as having a tenant that you would have to give 24 hours notice to view the interior of the property. What we know is some of the really good property managers in our market, they regularly, every 6 months typically, they schedule an appointment to view the inside of the property that they're managing just to make sure it's being well taken care of. We've seen where some owners and property managers don't ever get inside the property, and 10 years later, the tenant's finally moving out or needs some work done, and they find out some horrific scene inside the property. So it's always good if you are your own property manager to schedule that time regularly to view the inside of the property,
Yep,
right?
yep.
Another one, con to renting is the tied up equity. So your equity is locked on the property, meaning you don't have access to it unless you refinance or sell the home in the future, or you get a home equity line of credit against it. Can you do that on a rental property?
Sure.
Yeah. Okay.
Yeah, it's
So,
something to think about there because a lot of times people goes, "Well, no, I want my cash out." Let's say it's $200,000. Well, if you're gonna take that $200,000 and put it in a CD at the bank or put it in the market in a mutual fund, and, you're trying to figure out what the return is, there's a way to figure out, okay, if I keep it as a rental, what is my return on that equity that I have, that 200,000 versus my return on some other asset, some other investment. So it's a balancing game, and there's ways to calculate both of those. So it's like, okay, does that extra work that's involved in managing this rental make sense financially?
and this isn't the topic today, but owner financing, when you mention that and there's 200,000 equity there, doing owner financing could be a good solution, but we'll cover that some other time. So the summary, selling is ideal if you need immediate cash, want to avoid being a landlord, or think the market won't improve much in the future for value of your property. Renting is better if you want to maintain a long-term investment, create a new income stream, and have the financial stability to handle the challenges of being a landlord. So ultimately, something might be right for you. Hopefully, we gave you a little insight into some of the pros and cons.
Well, that was quite the deep dive on that, but it's a
It
good
was.
topic, and I think we get that question a lot when we're out talking to homeowners and trying to decide which is the best way to go for them. So, we're always happy to help.
Yep. Let's do some homes of the week.
Go for it.
Okay. So we have 118 Olas Altos in the Northeast Heights near Academy, Spain. I didn't bring my laptop to look, but it's a 3 bedroom, 2.5 bath, 2 car garage, 2 story townhome for 252,900. So just under 253,000. It does have a homeowners association expense on top of that. However, it covers some of the things that you might normally be paying anyway. So if you're interested in that 3 bedroom, 2.5 bath, 2 car garage townhome in the far Northeast Heights, give us a call right away and we'll get you scheduled to see it.
Far Northeast Heights, under 300,000. That's a rare animal for sure. There's not a lot of them out there.
Yeah. Another one, 14116 La Cueva Northeast. This one's actually in the Foothills South area, so east of Tramway and north of I-40. Very quick to get to places like the base near Four Hills, but on the north side of the freeway there. This one is a split level, which isn't as common in our market. So you walk in and you go up a few steps to go to the upper level, and you walk a few steps to go down to the main, but on the right or the left, there's sort of a middle level that's like kitchen and dining and things. So it's just over 2,000 square feet for 440,000. So there's a really nice big 4 bedroom home if you're looking for one. So those are them. But Tigo, I wanted to talk about land too.
Okay.
We have a couple really interesting parcels of land for sale. One of them is 160 acres in Stanley, but it happens to also have a mobile home on it that doesn't have much value, but the utilities are there.
But
So,
you can live in it.
oh, you could live in it. It probably could use some renovation. It's 239,000 for the 160 acres with the manufactured home on it that It's not pristine, but it's 160 acres,
Right.
right?
Right.
We also have a 2.5 acre parcel in a very close in location in Rio Rancho, right by the Rio Rancho High School. 2.5 acres for 155,000. There's properties around it, so there's gas and electric through the street there. 2.5 acres. It backs to an arroyo where I see a lot of people doing off-road stuff that might not be legal, walking their dogs maybe off leash that might not be legal, but it's kinda nice because you have that arroyo behind and a big expanse before you get to other houses. And then we also have Rio Vista for 75,000. Rio Vista is, I think I haven't looked it up. I think it's 3/4 of an acre, somewhere in there to an acre. It's bigger than a half, I'm sure. Anyway, it's 75,000 and Rio Vista is like people think of it as Corrales because it's right where Corrales Road and 528 come together on the north end of Corrales, and all the streets are Rio
Yeah.
something.
Yeah.
So
Yeah.
this one has a nice view to the mountains sort of from one side of it, not a full-on backyard view, but a nice level-ish building site with a little bit of a slope. So it's 75,000. So that's a great opportunity to build as well.
That brings us to our next topic, actually, which was you're a home buyer, and let's say you're financially you're pretty good, right? And you look at what's on the market, you look at what new construction's offering, as in production builds, right? And production builds can be a finished property. They've got some homes that are done. They've got other homes where you can do it, but you're still stuck with what they build.
You're talking about builders like Twilight, D.R. Horton, Centex, Pulte,
Exactly.
Abrazo, Westway,
Yes.
kind of production. They have a floor plan. You pick it. Maybe you pick a lot, or they've already got it mostly done or done, and you pick new construction.
And some of them do a little bit of customizing, maybe move walls a little bit, but they have to limit that because it just financially it's a problem. But there's this what
The lost middle.
I've been calling it the missing middle, but I don't know if that's
It's the
the
missing.
missing middle is a term in real estate talking about the kind of mid. You've got apartments, and then you've got single family homes, and you don't have a lot of those duplexes, triplexes. That's called the
Which
miss.
we
That
don't have here,
yeah,
but that's not what we're
yeah,
talking
that's called
about.
the missing middle in housing. But in this case, it's somebody that wants to build, but they don't even know where to start. And they don't know, like you're just talking about land. It's like, okay, I can go buy a lot, but then what do I do? Like, what's it going to cost for utilities? What's it going to cost for a well or septic if it
Or
needs that,
dirt,
or dirt work, or, whatever it is.
or
And,
building plans,
or
or
the plans.
permits,
Right.
or
Right.
a loan.
And the reality is there's not really anybody that like serves that market that can say, hey, okay, here's a lot, or what do you have? Okay, this is what it take, or you're looking at this lot. This is what it would take to get it ready to build.
What we know, Tego, is the builder wants to build, right? They don't wanna, like, figure out all of that, the logistics of it,
Well,
so
I
to
think a lot
speak,
of builders are developers by accident.
by default.
Yes.
By default. So they don't really wanna be developers, they just wanna build, but they a lot of times have to do a lot of the how much is the infrastructure gonna cost. What I know, I've sold over 200 lots in, or probably more than that now, well over 200. And what I know is sometimes buyers go and they say, "I'm looking for a piece of land," and they don't understand where the utilities are or what it might cost to bring the utilities even a quarter mile, gas, electric if it's available, or just electric with a propane tank or all electric property. Or they don't understand that maybe the soil is going to need to be scraped and brought engineered fill dirt in. So it might look like the price of that lot is really good, but when you start looking at all the extras, it's not good. North Albuquerque Acres is a great example of that. There's a lot of arroyos, and those lots have to be engineered as to where you can build on to be out of the floodplain. And some of them don't look as obvious, right?
Yeah.
Some of the
Yeah.
maybe there's a little low spot, but it doesn't look that bad, but it's floodplain.
Well, it's important to do your due diligence, and I in what you're buying, and when you're looking for those like just because it's a good deal, there might be a reason.
Right.
So yeah, you just got to spend your time with it, and it's always smart if you have decided to go down that custom build route, is talk to a builder, talk with a designer, talk with somebody that kind of understands the process so that you don't get ahead of yourself and buying a lot that's going to be really difficult to build on.
Probably need a whole team of
Yeah.
people working for you. We're working on talking to different people saying, we feel like there's a miss here in somebody to help guide you through all parts of it, right? Because, we know a little bit about land. We help people try to figure out utilities and what it would mean to bring them in, or are they existing? But then there's the contractor, the builder, and then there's maybe what's your house plan going to look at and what makes sense? And all of those are different pieces.
Well, and I think what I want to get at is back to where I started. You want to buy a home, you can't find something in resale, you can't find something in production build. You want to build custom, you don't know where to start, but there might be an opportunity for you. There might be a way you can get that home built exactly what you want, and it might not be as expensive as you may think. Now, let's be fair, new construction is always going to be more expensive than resale, at least in our current market. That's just the way it is. So you can always get more house for the money for but building a home is great.
It is. One of the things we know, Tego, is a lot of times the actual size of the house these days needs to be a little bit smaller so that it can be more affordable.
Yeah.
Can somebody get a five or $600,000 new build? Yes. But how the floor plan works and lays out can make a huge difference in needing 2,500 square feet versus 2,000 square feet. If the floor plan is done really well, you can still get the house to live large by making it a little smaller, maybe, and a little more affordable or in your budget.
No, that's great. And if this like if you're curious about this conversation and you're wondering what's going on, give us a shout. We've got somebody that can actually help you with this, and they're starting to kind of figure out this service to help people get from I want to build new, I don't know where to start, and do a custom home, and can help you through the process. So you could reach out to us on that. I want to hit on, I guess, one last thing before we wrap, which was I went to a event this week with Housing New Mexico, which is part of the Mortgage Finance Authority, and talking about all the different programs that they offer for housing. And there's a lot of programs we're familiar with related to home purchasing, down payment assistance, closing cost assistance,
Mhm.
low down payment programs, stuff like that. But they offer a lot of other programs. They offer financing program for development, which is surely needed in our market for developers, not just on residential single family, but also multifamily. So they got a lot of good programs. They're doing some great work there, and I was very impressed. But the one thing I want to point out is a program called the Targeted Areas Program, Tracy. We've talked about it before, and I want to keep bringing it up because I think it's a really good opportunity for people because it's not every home in the market, but what they've done is pick certain areas in the Albuquerque area. And as of today, there's about 55 homes that are for sale that are in these areas. Now, these are the areas you would suspect. It's kind of lower income parts of town, International District, Bareilles. There's some areas on the west side,
Coors and I-40 just
Coors
south.
and yeah, like Coors and Central. Some of those just kind of very general Wyoming, Montgomery, and I-25 area as well. And so anyway, it's certain areas. The cool thing about it is you can, if you buy a home in one of those areas, you can qualify for a first time home buyer program, but you don't have to be a first time home buyer. Now, you do have to live in the home. It is for owner occupied. It's not for investors, but it is a good program. You probably get a little bit better interest rate than the going market rate right now. So there's that incentive too. So I have it on our website, the home search, if people want to check it out. And you can, if you just search MFA Targeted Areas Program in Google, you'll find it. You'll see it. So I just want to bring that up again because it keeps coming up, and I think it's a valuable program people need to know about.
Great. Thanks so much. Well, always great to be here talking real estate with you all. We appreciate you listening. If you have questions, you know how to reach us, 505-448-8888. Welcome home, abq.com. Until next time.